What's going on, guys? Good morning. I hope you're all doing well. Welcome back to another live commentary here of the liquidity bar concept. Right here we have a scenario for EURUSD. We are currently within a bullish range. We have just taken the SP, which is the shift point. We have broken through the last sell side order block. We have also come down within our bullish range and met the origin of our sell side liquidity and reacted bullish, telling us that the orders now are looking to run into the liquidity above. Now we have two different trajectories for this liquidity on the upside. We have our first area of trajectory here, which is relatively steep. This is where our SP is coming from, the last major high that put in a low prior to price tapping into this order block. We then have a second set of highs over here. So our first target is this green bar here, which is the origin of the liquidity here. So we're looking for one of two things. Either a push straight to this point right here, or price to tap into this and run higher. If we tap into here first, do not expect price to react if we get back down into here. So, as always, we will fast forward this and we'll come back when we got some updates to give you. So as you can see, price moving very nicely now towards the liquid target. Now we do expect price to react at the areas of supply that are left unmitigated. So for example, right here where we are now, reacting off of this, and we expect this area to react as well. Now this green target here is the origin of the buy side liquid. This is simply an unmitigated area of supply that caused one of these shifts lower. So pushing back into this area right now, if we come and tap into this point and reject heavily, then we'd expect price to reach this relatively quickly. If we come through here, we will look for price to react at this area of demand to continue this upside movement. So far, we have collected most of our liquidity, but not all of our liquidity. So we will track and see what price wants to deliver for us. But as it stands, we'd expect price to break through this area of supply, reach our target. When we do hit this target, we're expecting price to deliver something like this. Okay, sweeping a high, running back down into lows, and then we will expect it to seek the area of liquidity that this has stemmed from, which would lead us back to roughly here. And from there, we'd expect the bullish trend to continue as an overall directional move. Of course, at each point within price, we track it and read what price is telling us. And if overall it doesn't deliver what we want, then we simply spectate. We do not trade, we only spectate. Again, if it does deliver what we want, you can jump in knowing that you're following risk and following your rule set as you should be. Okay guys, so target hit. We're now looking for price to react at this level. Check out if we do drop down lower here. Now if we don't, that is completely fine. We have hit the liquidity target, so the next step is to either run this whole structural narrative move here and continue the upside movement, or it would be to drop down and run into the lower areas that we spoke about earlier, similar to this. This is the ideal scenario, but remember, if this is the trending continuation, which I believe it is, pullbacks are the only part that are not necessary. Always remember, if you're trading counter trend, you're trading price action that is not necessarily guaranteed to deliver, whereas a trend expansion is guaranteed to deliver because price has to expand to new highs or new lows depending on what direction you're following. We'll leave this again to play, and when we get to something to speak about, we will come back to it and we will cover it again. Now of course, remember, if you haven't already looked at what the principles behind the system are, check out the What Are Liquidity Bars video, and that will explain to you how these concepts are used, and these are obviously our live examples showcasing them. So I'll catch you guys very soon. Okay guys, so we are starting to break down very slightly here. We have marked an area right here, which is the origin of the imbalance that took us into this area. Again, remember, we use imbalances as footprints for institutional order flow and institutional market movement. Okay, so if you're seeing smaller time frame imbalances or order blocks that haven't been mitigated, it's a very clear point that price essentially is running from institutional orders or running to institutional orders. That's exactly why and how we use this system as a collective, right? So let's just break down how we came to the move, essentially to establish from here up to here. Okay, now if we zoom out, we go to the 5-minute time frame, you can see that we created a very clear liquidity bar across these lows. And from that liquidity bar, we have come back down to the origin of this sell side liquidity, which is here. So we also have a higher time frame order block here, as well as the origin of the liquidity, which is where the imbalance starts. We tap back into this, and then we take the first liquid high within our last displacement, the same as we did here. We displaced higher, we took the first liquid low, and we came down to the origin. Here we took the first high, we came back to the origin. The same thing will generally happen most of the time, but of course there's going to be scenarios where it doesn't do this. One of those scenarios being if you take a higher time frame point of liquidity that has already triggered this movement to come in, so you are not going to take the liquidity across here on the 1 minute by running up, as the larger time frame move is already in play. Of course, we're not here to explain and break down exactly how to use this system. We're here to showcase it to you live as price moves. Remember, this is not about taking positions within these movements. It's about understanding the concept so you can then confidently apply this to your charts and execute based off of it. So next step here, guys, is we either run these highs, which it looks like we may do, and we take out these highs continuing up to our trend. We have an entry yesterday based off of the same concept, which is run back to the origin of liquidity, react, take the high and boost through these highs. Again, this did run almost to target and unfortunately dropped down a little bit. But now we have the same scenario happening at the origin of this liquidity. So I am expecting the swing high to be taken right now. So let's see if this plays out. Right, guys, so because our swing high is substantially higher, we are not going to stay live here and record the whole thing, as it could take best part of the day depending on what price decides to do. But we will update like we did with our EURUSD, and we will show you what this looks like if we get to our target, and we will showcase it again once it's gone through. We've walked you through the main trigger. We've walked you through the loading of the weapon. The trigger has been pulled. Now we just wait for the target to be hit. Check back in with you in a few hours. Okay, guys, so here we are now back on the same chart that we obviously covered this morning as price was delivering. And we actually had CPI today. So the CPI has caused a very large movement within the market, which we always expect. It's the only time we say that price action is going to essentially disrespect the rule basis that we use, which is when it's fundamentally driven. Now, we left off as price was running this. We expect the run of our swing high. Now, if you look at what we did, the same principle occurred. We ran our origin, we ran the main high, we pulled back into the nearest area of demand. We created a miniature version of the same scenario here. You can see that we're putting in a high. We're having impulsive moves down each time, each one of these highs holding impulsiveness, imbalance, and unmitigated order block, each of them putting in a new low. We take the first high, which tells us that we're most likely going to want to run into here and take this high. we play back into the lower area of demand, and then we run high, and we actually get to our swing high, just about. We miss it by, I believe, around 1 point. But the liquidity principle has played out fully, and now price is ready to change its direction, and we will indeed track price for bearish movements if it breaks out of this range that we have established. So guys, if you have enjoyed this video, make sure you hit that like button, make sure you hit the comment button and drop us a comment down below, and I'll catch you all in the next one. Peace out.